China has taken the extraordinary step of cutting ties with a record-breaking amount of U.S. Treasuries and agency debt bonds. This monumental decision, valued at $53.3 billion, is not just a financial maneuver, but a fierce rebuke against the United States' aggressive policies and sanction threats. China's drastic action has ignited a firestorm of controversy and speculation about the future of international relations and global economic stability. The audacity of this move cannot be overstated. For decades, China has been one of the largest holders of U.S. debt, a cornerstone of the intricate financial relationship between the world's two largest economies. By offloading such a significant portion of its U.S. holdings, it will not be bullied or dictated to by American policies that it perceives as hypocritical and self-serving. The timing of this decision is equally provocative, coming on the heels of President Joe Biden's announcement of sweeping new tariffs on Chinese imports. These tariffs, framed as a necessary measure to counteract China's alleged unfair trade practices, have been met with scorn and derision in Beijing. Adding fuel to the fire, former President Donald Trump has waded into the fray with his typically incendiary rhetoric. Trump, eyeing a return to the White House, has vowed to impose even harsher tariffs on Chinese goods, suggesting rates that could exceed 60%. This bluster has only served to heighten tensions with Chinese officials, openly mocking the notion that the U.S. can unilaterally dictate terms to a rising global power. China's financial maneuvers are not just a response to current policies, but a strategic preparation for potential future conflicts, including the much-feared scenario of a military confrontation over Taiwan. Ensure you finish this video for a perfect understand. Stay with us as we delve deeper into the intricacies of this unfolding saga, exploring the motivations, implications, and potential outcomes of China's bold move. This is a story that touches on the very foundations of global power and economic order, and its reverberations will be felt for years to come.
I've made clear that the United States does not seek a wholesale separation of our economies. We seek to diversify and not to decouple. A decoupling of the world's two largest economies would be destabilizing for the global economy, and it would be virtually impossible to undertake. Actions we take to protect our national security are designed to be narrowly targeted, and that they are premised on straightforward national security considerations. They're not undertaken to gain economic advantage over China.
So yesterday when you arrived at our airport and got off the plane, a rainbow appeared in the sky. It is a natural phenomenon, of course, and it's something we often see. But I think it should also apply to the China-US relationship. I think there is more to China-US relations than just wind and rain. We will surely see more rainbows.
Hello and welcome back to Innovative Check YouTube channel, where we delve into the innovative and transformative projects changing our world. If you're new to the channel and enjoy learning about innovation stories around the world, you've come to the right place. Please subscribe, like, and comment to help boost our videos on YouTube. China's decision to dump U.S. debt is a calculated risk, one that underscores its readiness to endure economic pain, to assert its sovereignty, and retaliate against what it views as American overreach by shedding U.S. Treasuries. China is not only diversifying its portfolio, but also signaling its willingness to destabilize global financial markets. If pushed too far, this move has the potential to raise U.S. borrowing costs and disrupt the delicate balance of the global economy. It is a bold gambit, reflecting Beijing's growing confidence and its resolve to challenge American dominance on the world stage. Critics of the U.S. administration have seized upon this development to lambaste what they see as a misguided and arrogant approach to international diplomacy. They argue that the U.S., in its zeal to maintain its hegemony, has grossly underestimated China's capacity for economic retaliation. The narrative that America can simply pressure other nations into compliance through sanctions and tariffs is being exposed as a dangerous fallacy. China's actions are a stark reminder that the era of unchallenged American economic supremacy is waning, and the consequences of this miscalculation are beginning to unfold. The financial markets have reacted with a mix of anxiety and anticipation. Investors are bracing for volatility, aware that the reverberations of China's decision will be felt far beyond the immediate fluctuations in Treasury yields. The broader implications for the U.S. dollar status as the world's primary reserve currency are particularly concerning. Should other nations follow China's lead in diversifying away from U.S. debt, the long-term impact on American economic power could be profound. Just a quick reminder to hit the like button below. YouTube has been restricting my videos a lot recently because of bots. So your like does help out this video massively in terms of the algorithm in YouTube. Tensions between China and the United States are still rising. Now, China is taking a significant step that further complicates the relationship. In a historic move, China cuts ties with a record number of U.S. Treasuries and agency debt bonds that are worth $53.3 billion. Why did China do this? And what does it mean for the U.S.? Let's get into it. With economic relations between China and the United States continuing to raise investor interest, China has deviated from historical norms by offloading one of the largest amounts of U.S. Treasury and agency debt. Particularly, in the first quarter of 2024, China offloaded a record-breaking $53.3 billion of U.S. Treasuries and agency bonds. Notably, China, traditionally a major holder of U.S. debt, reduced its Treasury holdings by $22 billion during the first 3 months of 2024, while the remainder of the offloaded assets comprised agency bonds. According to data provided by Bloomberg on May 16, as reported by Feingold back in April, in 2023 alone, China's gold reserves surged by over 225 times. Notably, the country has consistently boosted its gold holdings for 17 consecutive months. This comes at a time when a previous Feingold report indicated that China's debt grew significantly faster than the U.S. over a 12-month period. If you are enjoying this video so far, please don't forget to subscribe, share the video, and comment. Indeed, economic tensions between China and the U.S. are escalating, raising questions about stability. These renewed tensions have emerged following President Joe Biden's announcement of sweeping tariff hikes on various Chinese imports. The new tariffs are part of a broader strategy to counteract what the U.S. administration perceives as China's unfair trade practices. On the other hand, presidential candidate Donald Trump has suggested that, if re-elected, he might impose tariffs exceeding 60 on Chinese goods. China is also doing this to avoid sanction if they ever invade Taiwan. They are learning from Russia and what is happening to Russia. In light of these developments, China's financial strategy appears multifaceted. By reducing its holdings in U.S. Treasuries, China is not only signaling its discontent with U.S. policies, but also taking precautionary measures to safeguard its assets amid geopolitical uncertainties. The sale of such a substantial amount of U.S. debt could have significant implications for global financial markets. Investors are keenly observing the potential ripple effects on interest rates and the stability of the U.S. dollar. The move to increase gold reserves further underscores China's intent to diversify its financial portfolio. By bolstering its gold holdings, China is enhancing its economic resilience. Gold, traditionally viewed as a safe haven asset, provides a hedge against economic volatility and currency fluctuations. This strategic shift indicates China's preparation for potential economic disruptions resulting from heightened tensions with the U.S. Economic analysts are closely monitoring how these actions will impact the global economic landscape. The reduction in U.S. debt holdings by a major creditor like China can influence the demand for U.S. Treasuries, potentially leading to higher borrowing costs for the U.S. government. This development comes at a time when the U.S. is already grappling with high inflation and efforts to stabilize its economy. The implications of China's actions extend beyond financial markets. They reflect the broader geopolitical struggle between the two superpowers. The U.S. and China have been engaged in a trade war for several years, with each country imposing tariffs and other trade barriers on the other's goods. These measures have disrupted global supply chains and created uncertainty for businesses and investors worldwide. China's recent moves can be seen as a response to the perceived economic aggression from the U.S. by selling off U.S. debt and increasing its gold reserves. China is signaling its readiness to withstand economic pressures and asserting its financial independence. Despite this could embolden other countries to reevaluate their economic ties with the U.S. and explore alternative financial strategies. Furthermore, the timing of China's actions coincides with a period of political transition. In the U.S., the upcoming presidential election has introduced additional uncertainty into the economic relationship between the two nations. candidates from both major parties have taken strong stances on China, promising to implement policies that address trade imbalances and protect U.S. interests. This political rhetoric further complicates the already delicate economic dynamics between the U.S. and China. As the situation unfolds, it is crucial for policymakers and investors to carefully consider the long-term implications of these developments. The actions taken by China highlight the interconnectedness of global economies and the need for diplomatic efforts to manage economic disputes. Both the U.S. and China have significant roles in the global economy, and their relationship will continue to shape the economic landscape for years to come. China's historic decision to cut ties with a record amount of U.S. Treasuries and agency debt bonds is a significant development with far-reaching implications. This move reflects the escalating economic tensions between the two nations and China's strategic efforts to safeguard its financial interests. The global financial markets and geopolitical landscape will be closely watching how this situation evolves, as the actions of these two superpowers continue to influence the course of the world economy. Thank you for your attention, and I welcome your thoughts and questions on this complex and vital subject. Do you want to watch more videos like this one? If yes, please like and share the video and subscribe to get exclusive videos about how phenomenally China is developing and growing its influence. Your subscriptions and likes motivate us to generate more content, so please keep supporting us. Check out these videos showing on your screen right now, and I will see you on the other side.